All right, let's jump into this deep dive. And today we're taking a look at the HDFC MF Yearbook 2025.
Yeah,
It's a pretty dense report,
it is.
but chock full of insights about, India's investment landscape.
Absolutely.
And we're going to try to unpack some of those for you today.
Perfect. It's all about, connecting those global dots with India's unique position, and what's happening in the world really sets the stage for India's growth story.
Yeah, let's set that stage.
Okay.
The report kicks off with a snapshot of the global market in 2024, and overall a pretty good year for most assets.
Yeah,
But there's some interesting twists.
for sure.
While the NASDAQ 100 continued, it's an impressive run with a 10-year CAGR over 15%.
Yeah.
Some unexpected players really kind of stole the show.
Yeah, the Hang Seng and Shanghai indices, which, haven't always been star performers, actually outperformed expectations.
Right.
And this mean reversion, where prices tend to return to their long-term average,
Yeah.
is a fascinating trend to watch.
It definitely suggests that there are some underlying forces at play that are shifting those market dynamics.
Absolutely.
Now let's zoom in on India.
Okay.
The report highlights a remarkable 9-year streak of positive returns for Indian equities.
Yeah.
That's got to be more than just luck, right?
Absolutely not. This consistent performance points to a very powerful economic engine fueled by several factors.
Yeah.
And it wasn't just a few sectors that were doing all the heavy lifting.
Right.
The report highlights some impressive 5-year CAGRs across the board.
Boy.
Pharma at 24.7%, IT at 24.9%, and auto at a whopping 23.9%.
Whoa, those are some serious numbers.
They are.
So what's driving this incredible growth in India?
Well, the report points to India's projected growth leadership. We're talking faster growth than China, other emerging markets,
Okay.
and even the global average.
Wow.
The IMF projections are pretty clear on this. India is set to be a global growth leader.
That's exciting.
It is.
But is it just about the rate of growth, or is there more to the story?
Well, there's definitely more to it. It's not just growth for growth's sake.
Right.
The report emphasizes the quality of that growth as a key factor.
Okay.
Macroeconomic stability, low leverage, and a stable external situation. These are all signs of a healthy and sustainable economic expansion.
So it's not just a fleeting moment of economic success. It's a sustained period of growth.
Right.
Built on solid foundations.
Absolutely.
And the report digs even deeper to unpack the forces behind this Indian economic engine.
Right.
Let's dive into those, starting with the demographic dividend.
Okay.
What's the story there?
Well, the story is all about India's young and increasingly skilled workforce.
Yeah.
It's the largest source of cost-effective skilled labor, especially as China's workforce starts to age.
Right.
This is a huge opportunity for businesses that are looking for a talented and affordable pool of employees.
But with a large workforce comes the challenge of creating enough jobs.
Yes.
What does the report say about that?
The report highlights the need to generate 7 million jobs annually to fully capitalize on this demographic dividend.
Wow, that's a big task.
It is a big task, and the manufacturing sector plays a crucial role in achieving this.
So manufacturing is key to absorbing this incredible workforce.
Absolutely.
But can India really compete on a global scale when it comes to manufacturing?
Well, the report makes a very compelling case for India's manufacturing potential.
Okay.
And here's a fascinating fact. Countries with a stronger manufacturing base tend to see higher per capita incomes.
Mm-hmm.
The report even includes a chart that really visually highlights this connection between manufacturing and economic prosperity.
That's a great point.
Yeah.
And let's not forget about India's cost advantage.
Of course.
They have incredibly low labor costs, even compared to China.
Yes.
That's a big draw for businesses looking to set up manufacturing operations.
Absolutely. Those cost savings are a major incentive for companies to choose India.
Right.
And it's not just about factories and production lines either.
Okay.
India has a thriving services sector.
Yeah.
That's also a key driver of exports.
It seems like India has a lot going for it.
It does.
But what about challenges?
Right.
Is there anything holding it back?
Well, the consumption story is a bit of a mixed bag.
Okay.
In the long term, the report sees premiumization as the trend to watch.
Okay.
Rising incomes and rapid urbanization are fueling this shift towards higher-end goods and services.
So while the long-term outlook for consumption is positive, are there any short-term challenges?
Yes, the report points to a cyclical slowdown in consumption,
Okay.
driven by a few factors.
Okay.
Flat rural wages, pandemic savings drying up, and a credit slowdown are all playing a part.
Yeah.
They even provide specific examples from a mass versus premium consumption chart.
Okay.
For example, while sales of compact cars and regular spirits have slowed, the demand for large SUVs and premium spirits has surged.
Wow.
This really highlights the divide in the market.
So it's a tale of two consumers in a way.
In a way, yeah.
The premium segment is thriving,
Yes,
while the mass market is facing some headwinds.
it is.
Now let's talk about another crucial factor for long-term growth, capital formation.
Okay.
What does the report have to say about that?
Well, think of capital formation as laying the groundwork for future economic expansion.
Right.
And there's good news. The government's share of capital expenditure has increased, which is a positive sign.
Okay.
But,
There's always a but, isn't there?
of course, the report stresses the need for private investment to really kick into high gear.
Right.
Without that, India's long-term growth potential might not be fully realized.
So government investment is a good start,
It is.
but it's the private sector that needs to step up and really drive capital formation.
Right.
Now, let's shift gears and talk about a sector that's transforming India's economy, digitalization.
Okay.
The report has some pretty mind-blowing projections about this.
Yes, the internet economy is projected to explode, growing from 5% of GDP to a whopping 13% by 2030.
Whoa, that's massive.
It's massive.
What's fueling this incredible growth?
Well, several factors are at play here.
Go.
First, India has a massive population that's rapidly becoming more connected.
Right.
Second, government initiatives like the PMJDY have brought financial inclusion to millions of people, opening up a whole new world of digital possibilities.
Yeah.
And third, the digital economy is a powerful engine for job creation.
Right.
Think of all those food delivery drivers and e-commerce workers.
So many.
So many.
It sounds like digitalization is more than just an economic trend. It's a catalyst for social change as well.
Yeah, it's transforming the way people live, work, and interact with the world.
Now, we've painted a pretty clear picture of India's growth story.
We have.
But what about the investor's perspective?
Okay.
How do these factors translate into opportunities in the stock market?
Well, the report starts with the positive. Indian equities offer a unique blend of breadth and scale that's super attractive to global investors.
Can you break that down for us? What does that mean in simple terms?
Well, it means you've got a wide range of sectors to choose from.
Okay.
More so than in other emerging markets.
Right.
And the depth of the market has grown tremendously, with more and more companies reaching that billion-dollar market cap.
Right.
This gives investors a lot of options in a market that's becoming increasingly sophisticated.
So lots of choices and a maturing market.
Right.
Sounds promising, but I'm sure there are also challenges for investors.
Of course.
What are some of the things investors need to be aware of?
Well, valuations are something you need to consider carefully.
Okay.
While earnings growth has been strong, valuations are currently above long-term averages.
So what does that mean for investors?
Well, it means that your return expectations might need a reality check.
Okay.
The market is pricing in high growth, but can those expectations be met?
Right.
That's the big question.
So a little bit of caution is warranted.
Absolutely. And this is where stock selection becomes even more critical. The report highlights the importance of being invested in the right businesses.
Right.
The gap between winners and losers in the Indian market is huge over time.
So it's not enough to just be in the Indian market. You got to be in the right parts of the market.
Precisely. Stock selection is king.
Now we've talked about the growth story,
Yeah.
the opportunities,
Yep.
and the need for careful stock selection.
All right.
But what about risks?
Okay.
What could go wrong?
Sure.
What are the potential bumps in the road that investors should be aware of?
Well, the report highlights a few key risks to keep in mind.
Okay.
Slower interest rate cuts, global growth concerns, the ever-present valuation risk, and of course the escalation of geopolitical tensions.
Yeah.
These are all factors that could impact the Indian market.
So a lot for investors to consider.
There is.
But by understanding these potential challenges,
Yes.
investors can be better prepared to navigate the market and make informed decisions. Well, we've covered a lot of ground in this first part of our deep dive.
We have.
We've explored India's remarkable growth story,
Yeah.
delved into the factors driving this growth,
Uh-huh.
and highlighted some of the key opportunities and challenges for investors.
Yes.
We'll be back in just a moment to continue our exploration of the HDFC MF Yearbook 2025.
Sounds good.
Stay tuned.
All right.
Welcome back. We're diving deeper into the HDFC MF Yearbook 2025 and unearthing some valuable insights for investors like you.
Yeah, the report lays out some key tenets of equity investing,
Okay.
and it's time to dig into those,
Right.
starting with diversification.
Diversification. It's the golden rule of investing, right?
Absolutely. The report makes a strong case for spreading your bets, not just across asset classes, but also within equities.
Okay, so it's not just about having a mix of stocks and bonds.
Right.
It's about being strategic within your stock portfolio as well.
Exactly. They actually break down the numbers showing the impact of different asset allocations on portfolio volatility. Using historical data, they compare a pure equity portfolio to one that's blended with debt and gold.
So what's the verdict?
Well, the results are pretty clear. While equities offer the highest potential returns,
Yeah.
they also come with the most volatility.
Right.
Adding debt and gold to the mix smooths out the ride,
Okay.
reducing those drastic ups and downs.
It's about finding that sweet spot between risk and return.
Right.
A balanced portfolio for a balanced life.
Precisely, and the report highlights hybrid funds as a great way to achieve this balance,
Okay.
especially for first-time investors.
Yeah.
These funds take care of the asset allocation for you,
Right.
giving you exposure to equities, debt, and gold all in one package.
Less stress.
Right.
More diversification. Sounds good to me.
Sounds good.
But hold on. You mentioned diversifying within equities as well.
Yes.
What does that look like?
It means spreading your investments across different market caps, large, mid, and small,
Okay.
as well as different sectors and styles, like value versus growth.
So even if you're bullish on India as a whole,
Yes,
it's not wise to put all your eggs in one basket,
correct.
even within the Indian market itself.
Exactly. To illustrate this point, the report highlights the diverse winners across market caps, sectors, and styles over the past 20 years.
Okay.
What's interesting is that there's no single sector or style that consistently outperforms.
Right.
The winners rotate over time, making a strong case for spreading your bets.
So diversification is key,
Absolutely.
whether it's asset classes, market caps, sectors, or styles.
It is.
Don't put all your eggs in one basket. Now let's talk about another crucial aspect of investing thinking long term.
Okay.
This is where we channel our inner Warren Buffett.
Yeah,
The report really emphasizes the power of compounding
absolutely.
and the importance of staying invested for the long haul.
For the long haul, yes.
Compounding, that magical force that makes your money grow exponentially over time.
Exactly. They analyze the historical performance of the BSE Sensex, looking at the probability of loss over different time horizons.
Right.
And guess what? The longer you stay invested, the lower your chance of losing money.
Time in the market beats timing the market.
That's the key takeaway.
Right.
Trying to time the market,
Right.
hopping in and out based on short-term news and events can actually be very costly.
Yeah.
You might miss out on those big up days that really drive long-term returns.
So patience is not just a virtue.
Right.
It's a profit-generating strategy.
He is.
Now, the report also mentions SIPs,
Yes.
systematic investment plans.
Yeah.
How do those fit into the long-term investment strategy?
SIPs are a fantastic way to embrace long-term investing.
Okay.
They allow you to invest a fixed amount regularly,
Right.
regardless of market fluctuations.
Okay.
The report showcases two investors who started SIPs in different HDFC funds, one before a market correction, the other after.
Right.
Despite the market volatility, both investors came out ahead in the long run.
Wow, so the message is clear.
It is.
Don't let short-term market gyrations derail your long-term investment goals.
Yeah.
Stay the course, keep investing regularly, and let the magic of compounding work its wonders.
Well said.
Now, before we wrap up this part of our deep dive,
Okay.
let's take a moment to zoom out and consider the global perspective.
All right.
After all, India doesn't exist in a vacuum.
No, it doesn't.
Global events and trends can have a significant impact on India's economy and markets.
Absolutely. The report examines the global economic landscape
Okay.
and its potential impact on India's investment outlook.
All right.
They start by highlighting the moderating growth trend in major economies around the world.
So a global slowdown is on the horizon.
That's the indication.
Okay.
But what's interesting is that government bond yields are becoming divergent during this period,
Okay.
meaning they're moving in different directions.
Can you give us an example?
Sure, while U.S. bond yields are rising,
Okay.
those in the Eurozone are actually falling.
Why is that?
It suggests that investors have different expectations for growth and inflation in these regions.
So,
Mm.
even though there's a global slowdown,
Right.
there are nuances and regional differences to consider.
Precisely. And these differences can create opportunities for savvy investors.
Hmm.
Now, the report dives into the U.S. economy,
Yeah.
which they describe as the dominance story.
Okay.
Despite rising debt and persistent inflation,
Right.
the U.S. has remained a global economic powerhouse.
Okay, so the U.S. is still the big dog,
It is.
but are there any cracks in the facade?
Well, the report points to some potential risks,
Okay.
particularly the potential for increased protectionist policies.
Protectionist policies, you mean things like tariffs and trade war?
Exactly. They argue that these policies could lead to renewed trade tensions,
Yeah.
potentially disrupting global supply chains and hindering economic growth.
So a potential risk to watch out for,
It is.
both for the U.S. and the global economy as a whole.
Correct.
What about the U.S. dollar? Is it still king?
That's where it gets interesting.
Okay.
Despite efforts by other countries to diversify their reserves,
Right.
the U.S. dollar has actually strengthened
Okay.
against major currencies like the euro and the Japanese yen.
So reports of the dollar's demise have been greatly exaggerated.
It seems so. Now let's shift our focus to China,
Okay.
which the report frames as a story of debt, demographics, and deflation.
Not exactly the most uplifting narrative.
No, it's not. They argue that China's economic recovery faces significant headwinds due to high levels of debt, a shrinking workforce,
Right.
and deflationary pressures.
So the China growth story might be losing some of its shine.
That's the suggestion. And this has implications for the global economy as a whole,
Yeah.
including India.
Because everything is interconnected.
It is.
What goes on in China doesn't stay in China.
Exactly. And that's why it's so crucial for investors to stay informed about global trends and their potential impact on India's investment landscape.
We've covered a lot of ground today.
We have.
Global slowdown, U.S. dominance, China's challenges.
Right.
It's a lot to process.
It is. But by understanding these global forces, investors can make more informed decisions about where to allocate their capital.
Knowledge is power, as they say.
It is.
But before we get too carried away with global macroeconomics,
Right.
let's bring it back to India and wrap up this deep dive by revisiting the key takeaways from the HDFC MF Yearbook 2025 and what they mean for investors like you.
Sounds like a plan.
Welcome back to the final part of our deep dive into the HDFC MF Yearbook 2025.
All right.
We've journeyed through India's growth story,
We have.
explored global economic trends, and
Yep.
now it's time to distill all those insights into actionable takeaways for you.
Yes. Think of this as your cheat sheet for navigating the Indian investment landscape.
I'm ready for it. Give me the key takeaways.
All right. Well, the report paints a picture of an Indian economy that's poised for continued growth.
Okay.
It's a story driven by, powerful forces like demographics, manufacturing potential, and digitalization.
Right. But it's not a guaranteed path to riches.
Right. We've talked about the challenges too.
Yeah.
High valuations,
Yes.
a need for careful stock selection,
Absolutely.
and those looming global risks.
There.
It's a landscape that requires a balanced approach,
It is.
optimism tempered with prudence.
Right.
So how do we navigate this complex terrain? What specific guidance does the report offer?
Well, first and foremost, diversification is your best friend.
Okay,
Spread your bets across asset classes, market caps, sectors, and styles.
makes sense.
Don't put all your eggs in one basket.
Don't bet the farm on any single company or trend.
Correct.
What else?
Second, embrace the long game.
Okay,
Think in terms of years, not months or weeks.
right.
The power of compounding works best when you give it time to work its magic.
Patience isn't just a virtue; it's a profit generating strategy.
It is.
Got it.
Yeah.
Any other pearls of wisdom? Third, stay informed about global trends and their potential impact on India's economy.
Right.
The world is increasingly interconnected,
Yeah.
and what happens in other countries can definitely ripple through to our shores.
So keep your finger on the pulse of global events.
Yes,
But don't let them dictate your every investment decision.
correct.
It's all about finding that balance between awareness and action.
You got it.
This has been an incredibly insightful deep dive.
It has.
We've learned so much from the HDFC MF Yearbook 2025.
We have.
But before we sign off,
Okay.
I want to leave our listeners with a final thought-provoking question.
Okay.
Something to ponder as they embark on their own investment journey.
All right. Given India's demographic dividend and the push for manufacturing, what sectors do you think will see the most explosive growth in the next decade?
That's a great question.
It is.
It really gets you thinking about the future and where the biggest opportunities might lie.
There's no easy answer, but it's a question worth asking. By thinking critically about the future, anticipating trends, and identifying opportunities, you can position yourself for success in the dynamic world of investing.
Well said. That's a perfect note to end on.
It is.
Thanks for joining us on this deep dive into the HDFC MF Yearbook 2025.
Absolutely.
We hope you've gained some valuable knowledge and a fresh perspective on India's investment landscape.
Yes.
Happy investing.